Hey guys, how's it going? I hope you're having a great day. Today I've got an exciting announcement. I finally made an investment for the first time since January. Yes, that is right. I haven't made any investments in the stock market since January of this year. Basically because, and I explained this in yesterday's video, I've been finding a bunch of really great companies, but their prices have just been way too high. And as a general sort of umbrella of an opinion, I think that the stock market is quite overvalued, and for that reason I'm not able to find many stocks that come close to my valuation. However, because of this, over the last few months I've becoming less and less conservative, just a little bit, to see if there's anything I can find with maybe a little bit less of a margin of safety, or with using a bit of higher estimates, using 25% estimates instead of 20%, to see if I can find anything that I can put a little bit of money into the market into, because it's better to be investing small amounts when the market is high rather than not investing at all, because markets are irrational and they can stay irrational for very, very long periods of time. So it's important to not just be sitting on the sideline while you think that the market's going to crash in the next few years or months or whatever. It's better to be investing slowly, and then when the market does crash and when prices pull back significantly, you can then start to sink large amounts of money into the stock market. As I'm sure most of you know, the stock that I bought was Facebook stock, and I bought this last night just as the market opened. Essentially, yesterday I made a video about stocks that I'm buying in the month of August, and in that video I mentioned Facebook, and I said that it would probably be a buy for me at about $180 per share. And at the time the stock price was at about $220 per share, and I said that it's probably not going to come near my buy price anytime soon. And then what do you know, 6 hours later, stock price for Facebook dropped 20% after they released their second quarter earnings for 2018. So I decided I was going to go back over my value matrix and see, okay, so here's what I'm expecting to get over the next 10 years, or next 5 years actually. And I also wanted to see what was my potential downside. So if they missed what I was expecting them to hit, which is about 25 to 30% growth per year for the next 5 years in terms of earnings, if they miss that and they get significantly lower growth, what am I going to be left with? Am I going to be left with 20% down position 5 years later? Am I going to be break even, or am I even going to be up a little bit? So I wanted to see what my potential downside was. So essentially, if they do just 12% growth per year for the next 5 years, which is significantly lower than what I think they will do, I think they can probably do something about 25 to 30% per year each year for the next 5 years. But if they do just 12, I will still make between 6% and 22% per year over those 5 years. So the downside of them hitting only 12% growth is still pretty good returns over the next 5 years. And even worse than that, if they do completely terribly over the next 5 years and they can only grow at about 6% per year for the next 5 years, my portfolio or my position in Facebook will still be at either break even all the way up to 11% per year positive. So there is still a positive outcome even if the company falls short considerably over the next 5 years. And we need to be honest about this. Growth for Facebook is going to slow down over the next few years. Revenue is going to be slowing to 20 to 30% due to limited and restricted ad placements that Facebook is now entering into. Due to companies advertising fake news or false information through their advertisements, especially to do with political campaigns, Facebook is now being a lot stricter on who they allow to advertise on their platform, and for that reason they're going to be bringing in less ad revenue over the next few quarters and years. The amount of money that is trickling down from revenue to the bottom line is also going to be shrinking. The margins are going to be shrinking because they have now got a lot of added costs due to increased security and safety costs. However, in spite of this, we need to remember that Facebook just grew earnings at 31% for 1 quarter. And Facebook hasn't even begun to monetize some of their biggest platforms. Instagram and Messenger are both in the early stages of monetization, and WhatsApp hasn't been monetized at all. And all of these platforms have over 1 billion active users. Plus, ad rates are most certainly going up as more and more companies adopt online digital marketing and move away from traditional media advertisement platforms such as newspaper and TV advertisements. So that's my reasoning behind my investment in Facebook stock. But remember, this is a speculative position because, as I mentioned yesterday, we don't have 10 years of data out. So It's not clear where this company is going in the future, and we can't accurately predict that, so I'm keeping this to less than 5% of my portfolio. That's all I've got for today, guys. I did have another video that I was going to release today. However, I thought this was more important, so I thought I'd just record and put this up instead, and I will bring that video out tomorrow on my channel. So stay tuned for that. If you haven't already, what are you doing? Make sure you subscribe, like the video, show me some support, and I'll see you in the next one.